Welcome back to Growing Quality. My name is Elian, and in today's video I'm gonna take you through my analysis of Enphase. Now, this analysis contains part of my full analysis, which I plan to release in an email format weekly, every week a new company. So if you're interested in that, make sure to hit the subscribe button so I can make you conscious of future developments about it. Now, let's just dive straight into it. Okay, so what does Enphase do? Now, as they describe it themselves in their annual report, we are a global energy technology company originally founded in March of 2006. We deliver smart, easy to use solutions that manage solar generation, storage, and communication on one platform. Our intelligent microinverters work with virtually every solar panel made, and when paired with our smart technology, result in one of the industry's best performing clean energy systems. Okay, so what they are trying to say here is that they offer solar solutions for both commercial and residential solar projects. What they specifically mean by that is that they produce and develop microinverters, battery storage, EV charge boxes, and an app to monitor the system. So that's all fine that they offer this, but how do they sell them? Because they don't sell it to you as a consumer to just put it up your roof. Now, they sell it to distributors, to installers, to strategic partners, and to OEMs. Now, distributors, that's quite simple what's meant by that. And for the installers, they don't really sell it to each and every installer. They only sell it to a select group of installers. And by OEMs, they mean that they sell it to companies that produce solar modules, so panels, and they include the Enphase microinverter in their package so that they are sold together as one product. Now, Enphase sells to a few regions, and they sell to the United States and to Europe, but Europe mostly consists of the Netherlands and others. Now, others is not just Europe, they also sell to South America and also to Asia and Australia. But what we can see here is taken from their annual report. What we immediately notice here is that in the US, sales have dropped quite dramatically. So in the United States, sales are down 70% year over year, while internationally, sales, mostly in the Netherlands, are up quite a bit. So in the Netherlands, we can see a 79% increase year over year. And in others, so other European countries, South American, every other country they sell, combined, they have 26% growth. Now, what we can also say from others is that they see a large part in Europe, and besides that, they only specified the Netherlands here. We also know that the other two largest markets in Europe for Enphase are France and Germany. So it's good to know where they sell and what they sell, but who is leading the company? So the CEO is Badri Kotandaraman. It's quite a tough name to pronounce, so I hope I did it correctly. But he has been CEO of Enphase now for 7 years. Before, he worked as a founder at Inner Charge Solutions and Cypress Semiconductor Corporation. Now, from this one, you might wonder how he gets to Enphase, but as Enphase says it themselves, they are a technology company. They are not a pure solar company because their microinverters are part of a wider ecosystem that they try to produce, which is also heavily dependent on the app they have created. But I will try and tell more about this later when I get to my conclusion about the company. But first, besides the CEO, we also have Mandy Yang, the CFO. And Mandy has been CFO for 5 years now. And before she joined Enphase, she worked at Tesla, at SunPower, so a competitor, and Spansion. I never really heard of this company, but okay. She has quite some experience, of course, as we can see. You don't just become CFO of a company like Enphase. Then we have Raghu Belur, and he is one of the founders of Enphase, one of two, actually. And Raghu has been Chief Product Officer since the beginning of Enphase, since they started in 2006. And the other founder retired just in 2022. Now, Raghu, before he created Enphase or founded Enphase, worked as a manager at Cisco and an optics engineer. But yeah, this was until 1999. I don't know how relevant that still is today. Okay, so now that we know who lead the company, then how is growth over the last years? Okay, so then for the growth, we can see that Enphase really took a bump in 2019, then in 2020, and 2021 and 2022 were really big years of growth. Now, 2023 also started off as a good year of growth, but then, yeah, something happened and they started missing their numbers. And that something is something that you can already expect, and that's mostly interest rates. I will talk more about it when I get to my bear and bull case or bear and bull arguments more so and my conclusion. But the solar industry and therefore also Enphase has been hit quite bad with it. Now, if you want a breakdown of the quarters also, I will do this in my actual report. And once again, it's in the creation. If you want updates of it, just make sure to subscribe to my channel because you will get updates regarding it. And I plan on releasing that quite quickly. Now we can also see that revenue has been climbing by 25.7% on a 10-year CAGR and 48.6% on a 5-year CAGR. This is of course extremely high growth, and this has also been helped in first instance when interest rates would drop to zero in 2020, but then more so also with the enormous adoption of solar. Now, this is also due to regulations that Enphase has in its favor, and in California mostly being NEM 3.0. The only issue with it is that the Californian installers are still figuring out how they exactly need to sell it, but there have been very positive numbers coming out so far. It's just at still too small of a scale, and the numbers have pulled back too much in California to be really meaningful. But as the company says, over the coming quarters, it will become more prominent. So if we know the revenues, it's also good to know the gross profit. We can see that the gross profits have also been increasing quite well. So on a 5-year CAGR at 36.8% and at a 10-year CAGR at 25%. Now what stands out here is that the gross profits have actually increased in 2023 compared to 2022, while the revenues were down. This is because Enphase, of course, as you can see from this chart, has a dramatic focus on margins. Now, once again, I'm going to point you to my conclusion because there I will go more into it. But the point here is that they increased their gross profit while their revenues were slowing down. And that's a very good thing. Now, besides the gross profit, we also have the net profit per year. And we can see here also that they actually managed to scale it in 2023 compared to 2022. So the numbers, although on a revenue basis, are not as great as you wish they were, on a net profit basis, it's kind of hanging in there. Now, of course, you want better growth here, because growing 10% year over year is not really something you want from a growth company like Enphase, but at least it's still growing on net profit wise, unlike the revenue basis. So then we have the balance sheet. And I have to say, with this company, the balance sheet doesn't paint the complete picture. But we can see that the cash and cash equivalents went down year over year. This, of course, is from the year ending in 2022, so December 31st 2022 to December 31st, 2023. So cash equivalents went down. Now what else happened? Marketable securities, they went up. That's because Enphase has been putting all their cash into the marketable securities. They try to buy short-term bonds in order to gain some extra income from that. Okay. So then we go to inventories, and we can see that inventories have been ticking up a bit. If I do this just from the top of my head, it's about 25% here, and that's not great. And we know that this is only the tip of the iceberg, but I will get to that in a minute. Now, what else do we have here? What's important? Goodwill has stayed flat, so that's actually a great thing because they are not tangling with their goodwill in order to make their balance sheet look better. And then the total assets, they increased about 10% year over year. Now what we have on the liability side is that accounts payable, they have actually been going down. And also on the other side, of course, you have the accounts receivables. And just to go back to that for a second, they are also flat. So that means that's quite healthy. They have no short-term debt, as you can see here, but they do have some long-term debt. And that's about 1.3 billion compared to 1.2 billion last year. And from that debt, the first 100 million is due in 2025, then another 600 million in 2026, and another 500 million in 2028. So the company and the markets do still have some time to improve, and they have the cash to pay off that 100 million if they wish to. But yeah, they still have some time to recover, and stockholders' equity is about 900 million to 1 billion almost. So that also increased a bit from last year. So that's all looking quite positive. And now again, if you wish for the quarterly numbers for revenue growth and all that, just make sure to stay informed about any developments regarding the newsletter I'm about to release. Okay, so then we have three main competitors, and I'm just going to take you quickly through them. We have SunPower, which make panels and batteries. Then we have First Solar, and First Solar makes mostly panels. And then we have Solar Edge, and Solar Edge is often seen as the main competitor of Enphase. Now, Solar Edge makes inverters, but not the micro inverters, just the big channel inverters, if we can call them like that. And then Solar Edge has power optimizers, and these may look somewhat similar to the microinverters that Enphase produces. However, they are not actual inverters. They still push power to the long string, which goes to the central inverter. So that's the difference there. Then Solar Edge also has batteries, EV charge boxes, and software. However, basically all reports I came across said that the Enphase app is just a lot user-friendly and better than the one of Solar Edge. Now, of course, this is all quite anecdotal because there's not really any studies which will prove this. However, I did find that it said something about the competitive edge that Enphase holds at the moment. Okay, so as I've basically taken you through the main factors of Enphase, I'm gonna take you through my bull and bear arguments, and to summarize it, I have a conclusion to give to you. So let me give you my three main bull arguments. And the first one being is that Enphase is improving their margins. This is something I find great the accomplishment since seeing the macro environment Enphase is operating in. Because I already told you that Enphase is having a difficult macro environment due to increased interest rates and capital being more expensive. Enphase revenues have been taking a real hit because during Q1 and Q2 of 2023, revenues were still up in the 700 million range. And for Q1 2024, Enphase has guided for $260 to $300 million of revenue. So basically their revenue is now about 33 to 40% of what it was a year ago. and yet they still manage to improve margins. So how have they done this? What they are doing is they are moving all the manufacturing back to the US. They had a microinverter plant in Romania, or a partner for producing and manufacturing the microinverters, and they shut that down in order to bring manufacturing back to the US where they could do it the cheapest. What other bull argument do I have? That's the battery opportunity. Now, what opportunity am I speaking of here? So what they are seeing is that with California, which is having new regulations, which is called NEM 3.0, you may have heard of it, but what they see is that about half of the solar systems which are sold in California is a NEM 3.0 system. Of those 50% NEM 3.0 systems, about 50% of them bundles the system with an Enphase battery. Now, the batteries are way more expensive than the microinverters, so that brings in a good chunk of revenue. They are also trying to improve margins at the battery level, and one way of doing that is also bringing production partly to the US. So during the second half of 2024, they will open a manufacturing line in the US where they produce the batteries. And I believe they said Q3 of 24, but it was second half, that's for sure. So now the last bull argument I have is that they are actively decreasing channel inventory. Now you already saw at the balance sheet that Enphase has increased their inventory levels year over year. And this was not by choice. So what happened is that the sales channels or the distribution channels got so clogged up with inventory that during the last quarter, Q4 of 2023, Enphase actually sold $150 million less than was bought. So they had the goal of underselling the demand by 150 million, and they eventually came out by 147, just to clean up inventories in all the channels. So that's at the distributors or the installers. They have so much inventory due to a sudden drop in demand that Enphase now gets hit by it. And what they still have to do, and that's also one of my bear arguments, is that they still have more of cleaning up of those channels to do. At the bear argument, I will tell you more about that. Let's first look at the others. When we go to the bear arguments, because there are always two sides to an investment, we can see that I have my first bear argument is that interest rates are still increased. And why do I see this as a bear argument? Well, quite simple, because that is what has caused all the misery for this company. Now, I do see some bright sides in it, because what I think, but this is just a hinge, that consumers are getting used to the higher interest rates so that it will become less of a problem. I will tell you more about that in just a second. So, what I also have as bear argument is, just like I just said, is that the channel inventory is still clogged. They still have issues with channel inventory. And for Q1, they said that they will undersell again $130 million. So what will happen is, well, take Q4 of 23, for example, they had little over 300 million in revenues. So what has happened is that they sold about 300 million to their distributors, the installers, the OEM manufacturers, and the strategic partners. But they have sold 450 million worth of Enphase products. So that's how they can clean up those channels. And they have to do that again during Q1 of 24. And that's not a good thing, in my opinion. It's a problem, and they will have lower revenues due to it. Now, what I also have as a bear argument is customer dependence. And you may say, how can they be customer dependent if they sell microinverters, batteries, EV charging boxes, and they have an app which makes it all into one cohesive product? Well, during 2023, 40% of Enphase's revenues came from one customer. One. That's quite customer dependent. Now, Enphase doesn't specify who that customer is, but they have it in their annual reports. 40%, and it's actually been increasing over the years. They are very customer dependent. So, of course, it's a good thing that they have a very big customer, but we don't know who it is. And we do know that if that customer drops, Enphase has a big problem. Okay, so let's get to my conclusion here. Okay, so let me give you my conclusion about Enphase. Because it's a stock I invest in. And that does not mean that this is a buy or a sell advice. I do not do those. This is just my opinions. So, what do I really like about the company is the growth of it. They have gross margins of a little over 46%, and they actually increased them from last year despite having such a tough environment. Now they have net margins of just over 19%, and I find that really impressive seeing the stuff that Enphase is going through. And they do this by being so focused on margins. They don't care. Well, actually, they love to save 1 cent on every product they manufacture and sell. Because, well, they just look at it in the big picture, and saving 1 cent on an item can mean a lot. And this is just what comes across when you listen to the CEO talking, and it's something I really like. So now we also must wonder, does Enphase has a competitive advantage? And what we can see is that the microinverters do have its advantages, as they are way more reliable as the big box traditional inverters. They also give 30 years of warranty on those microinverters, and that's a that's a really long time. Now the microinverters also have their advantages in that every solar panel you have is independently controlled. So if one panel shuts down or gets broken or there is something with it, it's just that one panel with an issue and not the entire row or maybe even your entire system that has a problem. But of course, there are also downsides to Enphase, and more so the market they operate in, because interest rates are taking a heavy toll on the sector. Now, having the increased interest rates makes it really difficult to sell solar. This is also what the company says in their earnings call. They really have to redirect their sales strategies and how they sell these systems. The entire payback of the investment in solar has changed, and consumers are not as confident in the payback anymore as they were. Now, Enphase does have their software for it and they have their solar graphs for it, but it's still a tough sell in especially California, and also some European markets are still having troubles with it. They especially name the Netherlands as where they see recovery, but they are not back at old levels. Now, they also have the problem of the channel inventory because they still have to decrease that and they are still going to take revenue hits with it. During Q1, they already mentioned that they're going to take another 130 million hit in their revenues to decrease channel inventories. However, what is interesting about that is that demand is not as bad as it might first seem, because that means that although the revenues has come down from a little over 700 million to a little over 300 million, that in that 300 million is still 150 or 147, if we want to be precise, $1 million hit due to the decrease or trying to decrease channel inventories. What the CEO has said about it is that they see that there is now about 110-day inventory within the channel. And that's the entire channel. So from Enphase to end customers, there's about 110 days of inventory in between there. As I can just quote Barry, he says that they want to go to a best-in-class inventory. And he said he sees that as going down from 110 days in inventories all the way down to just 30 days of inventories in the channel. Now, once again, that's a lot of cleaning up to do in the channel, and that's not really a positive. However, it does mean that the picture may not be as bad as it seems. And that brings me to the final point that I want to mention here. Because what I see as a really, really good thing about Enphase is the leadership of the CEO and the transparency he tries to give towards investors and analysts. Because if you go and listen to any of their earnings calls, they are long. They are about 1.5 hours to maybe 2 hours, while other companies try to rush them in 40 minutes to an hour. Barry really tries to give all the analysts full answers. He picks apart every question and he really tries to answer it and make sure that the analysts know exactly what they want to know in order to make sure that they can keep evaluating Enphase as good as possible, and so that investors also know perfectly where the company stands. Now I'm just gonna do it one more time. I know I've said it a bunch of times before, but everything I just mentioned today comes straight from my Enphase analysis. And this is just a very basic part of everything I've done in order to analyze this company. Now, it's not yet here, but if you want to be on the list to receive one of those analyses every single week, just think of how much time it takes to analyze one of those companies, and you get an analysis from me every week. Make sure to subscribe to stay up to date and get all the updates regarding the newsletter I'm trying to create.